So let's talk about a weird situation we have here in Canada. We have this official system, the mortgage stress test, that's supposed to protect homebuyers. But here's the thing. It's created this bizarre paradox where millions of us are passing the test, doing everything by the book, and still ending up feeling totally, financially squeezed. So what on earth is going on?
Does that sound at all familiar? You checked all the boxes, you got the thumbs up from the bank, but that little knot of anxiety in your stomach just won't go away? Well, today we're going to unpack exactly why that feeling is so common and why passing the government's big test doesn't actually mean your housing situation is rock solid.
All right, so let's jump right in and look at the huge gap between what the test is supposed to be and what it's like in the real world. On one hand, you've got the official story, this idea of a financial safety net. But on the other, well, you've got the reality for countless homeowners, and it feels a lot different.
Now, the idea itself is actually pretty straightforward. And, it sounds super responsible. Before you get a mortgage, the bank has to pretend the interest rate is way higher than it actually is, and then see if you can still afford the payments. It's basically a financial fire drill, right? They're cranking up the heat to see if you can handle it if rates rise later on.
And look, the intention behind all this is totally sound. It comes from the main financial regulator, and the goal is to keep the entire system stable. Prevent a wave of defaults, protect the banks, and keep the whole economy from going off the rails. It makes perfect sense on paper.
But here is the massive catch. This is where that gap between the test and reality really cracks wide open. For all its good intentions, the stress test has tunnel vision. It's laser focused on one and only one specific danger, and it leaves pretty much everything else completely in the dark.
And that tunnel vision, well, that creates what we're talking about today, the great big blind spot. It's this massive oversight that can leave homeowners totally exposed to the exact kinds of financial shocks the system claims to prevent.
So here it is, plain and simple. The stress test is a one-trick pony. It asks one single question. Can you handle a mortgage rate hike? That's it. Full stop. What about all the other very real, very expensive costs that come with owning a home? The test just pretends they don't exist.
So let's run through a quick list of what gets ignored. First on the chopping block, condo fees. These are not optional. They can jump up unexpectedly, and the stress test is completely blind to them.
Then, of course, you've got property taxes. Your city can and will raise them. And just like condo fees, they add another layer of financial pressure that is nowhere to be found in the stress test calculation.
And then there's just life. The stuff that actually happens when you own a place. The roof needs to be replaced. The furnace gives out. These are huge bills, and the test just sort of assumed you have a magic pile of cash sitting around for these kinds of surprises.
And this brings us to a really crucial point. The system stress tests you, the person, but it doesn't stress test the asset you're buying. This is a huge deal, especially with condos. The test has no idea if the building you're buying into is a financial time bomb. Is its emergency fund healthy? Can it even get affordable insurance anymore? Is there a mountain of overdue repairs that's about to land on your lap as a massive special assessment? The stress test asks none of these questions.
So now we see all these separate risks that the test ignores. But here's where things get really dicey, when those risks start to stack up. Because in the real world, problems don't politely wait their turn. They love to show up all at once. And this whole situation is, in a very real way, a uniquely Canadian problem. Why? Because most of us don't get to lock in a mortgage rate for 30 years. Our mortgages reset every few years, which creates this recurring moment of truth for our finances. And that can create a perfect storm. Just imagine you're on a standard 5-year mortgage. Year 3, bam, your condo fees go up. Year 4, bam, property taxes get hiked. Then comes year 5, renewal time. And not only has your mortgage payment jumped because of higher interest rates, but you're also still paying those higher fees and taxes. Everything collides at the exact same moment.
And that right there is the fundamental disconnect. The test analyzes one risk in a perfect, clean laboratory bubble. But our financial lives are not a laboratory. They're messy. And in real life, all these pressures stack on top of each other.
So I want to be really clear about this. If you're feeling that squeeze, it is not because you're bad with money. It is not a personal failure. It is a measurement problem. The very tool that we're using to declare a home affordable is frankly broken.
And that broken measuring stick, it leads to what might be the most damaging effect of all, a completely false sense of safety. It's about what happens in our heads when we're told we've passed the test.
I mean, it's a totally natural thought, right? You think, hey, I passed the government's official stress test. I've been approved. I must be good to go. I'm safe.
You trust that the system has done its due diligence. But that confidence, it's built on a really shaky foundation.
So let's just spell it out. What does passing the test really mean? It confirms one thing and one thing only, that on the specific day you applied for your loan, you could, in theory, handle a rate hike. That's it. What it doesn't say is anything about whether your total housing costs are predictable or if your home is actually a financially resilient investment for the long haul.
And that really gets to the heart of it. Our entire system is focused on stress testing the borrower's finances instead of stress testing the long-term costs of the home itself. To put another way, we're kicking the tires on the driver, but we're not even popping the hood on the car they're about to buy.
So let's bring it all the way back to that feeling we started with, that sense of being squeezed even when you did everything you were supposed to do. If that's you, please remember this. You didn't fail. You followed the rules. You put your trust in a system that has a massive blind spot.
And that's why, at the end of the day, the conversation shouldn't be about who can pass or fail this specific test. The real question, the one we should all be asking, is a much, much bigger one. Given the complex reality of owning a home today, are we even using the right test to begin with?